So we'll go ahead and get started this morning. Welcome, everybody. My name is Matt Davison. Joining me today is Nick DeLis. We're here for another market briefing. It is July 18th. It's a Friday, last day of the week, and also an expiration Friday for monthly options. So we'll be talking about that here in just a little bit. Very intrigued by what we're going to see for the opening bell. It looks like futures were up a modest amount last night, about 20 points, I think, at the high. Pulled back just a little bit. We're just below that, so very interested to see where that kind of opening price gets set. And then do we continue to squeeze like we've been doing? It feels like the last couple of days into today's expiration, or do we see some kind of pullback? The other thing that, of course, could happen is the market could completely stay pinned. After this expiration Friday, though, really trying to gather and glean from the market. Is it going to continue to have that follow through, remain in the uptrend that it's been in for several months now? Or are we going to get any type of mean reversion? And then if we do get mean reversion, do we get follow through and actually turn into a reversal? So we'll talk about all those things here in just a couple of moments, but excited to be here this morning. Nick, before I continue, want to give you a chance to say hello. How you doing this morning?
Doing fantastic this morning, and that there's quite a bit I know that's been catching my attention. I'm sure that's been grabbing your attention from earnings that have been going on, and some of the companies, of course, we always talk about that. We'll see them, up 5 or 10%, right after the announcement, but then they might swing and be down 10% because as we dig through the rest of the report, we see more information. So might be seeing some of that going on, but can definitely swing and move around the markets. But I don't want to steal your thunder, Matt. So what's been kind of jumping out to you so far this morning?
Yeah, I mean, let's just start with a look here kind of at what's going on with the broader market. And sometimes it really helps to slow this down from daily into a weekly or monthly chart. And you can see what's happened over the last couple of months. I mean, in the grand scheme of things, right? We end up starting the month of April all the way up here. Yes, we finished a little bit lower, but we actually finished higher than the close of March. It was just a really nasty tail, right? A high frequency wave on that particular candle. However, as of the close of the prior month, we end up getting a positive candle. And then we're currently in July right over here, and you can see we're forging ahead. That being said, in the last couple of days here, let's go back and zoom in on this. We've kind of been trapped in this range. I know I showed this yesterday, but if you weren't in the aftermarket briefing, then what's been pretty crucial for this is that 6,200 level right there at the bottom. You can see that's obviously been a strong layer of support. And then if you wanted to do resistance, it's basically 6285 to 6290 is really more of a zone at the top. We have just almost perfect candles. It's at 6201 on the bottom side. But you can see basically when we got up here, we had been struggling even 2 days ago, right? Or 3 days ago at this point. Over here on the 15th, we popped above it, came back down, and we went right back to the bottom of the zone pretty quickly, but finished the day positive. Then yesterday, we started in pretty much the same spot, and we end up pushing. And I saw a question about what caused the sell off at the end of the day yesterday. I didn't see anything too specific, and it didn't really sell off a ton, right? It was pretty normal movement to me, so I didn't see anything um, that really stood out to me. Just look at it from this perspective right over here. I mean, it was pretty normal movement, right? 6304 to 6297, 5 point sell off. Not a huge deal, I don't think so. There wasn't any particular news that really stood out um, that I think warrants a connection with that particular sell off. But the question is, where do we get this kind of opening price today, and where do we end up closing the day? Bulls are looking for one thing, and it's pretty obvious, which is we'd probably like to be above that 6,300 and finish the day there strongly. At the very least, not really much lower than where we closed today. As you can see, maybe a little bit lower is okay. 6,280 would be still a defense of that previous resistance point. And then bears obviously are looking for the opposite. Preferably, they'd probably like to finish the day more towards the bottom end of the zone and see if we can actually start turning this into a topping pattern. We really just haven't seen that, right? Any kind of weakness in the last couple of weeks has just been absolutely gobbled up. We can't go down for more than 2 days, it seems like, right? And when we do, it's pretty weak. We're talking about 97 points on a $6,300 notional value security. So that's what's going on in the S&P. We'll keep it there just from a larger perspective as well. If we zoom this out to say 5 years, right? Obviously, when we look at the daily perspective, this looks really dramatic. And don't get me wrong, it certainly was going from just under where we're at right now, all the way down and undercutting to 48.33, coming back to this January 2022 high. Not the most fun feeling in the world. But then again, when we start zooming it out to something like a 10-year, or if we zoom it out to a max, looks like a blip on the radar. And obviously, I was in the logarithmic. I didn't realize that when I initially had the chart. So that's going to make this more dramatic versus something over here. But in percentage terms, and that's what the logarithmic is really attempting to do here, is give you that concept of what does it look like in percentage terms so that you can see it in comparison with prior historical moves. And obviously, in historical terms, not looking as severe, looking very similar to what we kind of saw in 2022, 2020. It was just a lot quicker, maybe, than the one that we more recently saw back in 2022. That being said, let me hop over in the option chain for just a moment here. And I just want to look at one thing here in the pre market, and that's going to be looking at the pricing on the straddle. So we're expecting here from the market, maybe not expecting, but the straddle, if you were selling that straddle, you could collect about $26.35 for it right now here this morning. If you were buying it, you'd have to pay that, of course. So when you go over and divide by 62.95, looking about 4.6, 4.7% in terms. So looking for another kind of moderate day. That's about where I believe we ended up finishing yesterday. So wanted to give the pricing on that going into the expiration here. Let me just look at a couple of other.
And and just to kind of talk about that math there, a 26 point straddle on a $6,300 6,300 point underlying is just over a 0.4% expected daily move.
Exactly. And we'll kind of continue on here with the same line of thought. So let's go to this daily chart and look at the cues just to get our specific levels. Because I know people don't really trade in the X as much specifically. It's a pretty similar idea. The cues have just been a little stronger, right? And we saw that going all the way back to the early part of May. You remember if we were looking at basically the middle of May through the middle of June, well, SPX was still in a range. We didn't see that, right? This was the high point back in May, right over here. We actually had a higher range. It was more like this for the Qs. And really, that resistance turned into support. And now we've continued to exhibit similar behavior, right? We had this resistance point in early July. SPX had been in a range. We popped above and really we kind of held that a couple days ago. We had a doji candle on the 16th and this continued to push higher yesterday. And here we are today and we see a higher point. So a little bit stronger on the cues, and that has to do with some outperformance in individual securities. I mean, I'm thinking about something like Nvidia, and what it's been able to do here over the last couple of weeks. Meta, Google having some big reactions, and you're seeing the larger cap stocks kind of come back into play. Though yesterday, if we note really quick, SPX equal weighted was actually the best performer outside of the Russell 2000. So we're seeing a little bit of broadening, and the Russell did very well yesterday. And we hadn't really been seeing that in tremendous stride the last couple of months. It's kind of been back to the old playbook, which is mega cap growth is going to lead the way. But we have seen a little bit of broadening out here, even though when I flip over to the Russell, you can still see that we're well off the highs, but making progress. And everything's remaining in an uptrend. So we kind of have this threshold on the bottom side here, this kind of zone between 2195 and I'll use this low right over here, which is 2160. We kind of ran into resistance, failed, came back above it. Now we're in this higher regime. It has pulled off the last couple of days, and it was a little bit weaker than some of the other stuff. So we have this 2275 on the top end here. You can see this turnaround point back in October of last year. It was kind of using the shelf as resistance as well late last year. And then early this year, it was support. We ran right back into it, and that's just shy of 2300, about 25 points below. So can we get some follow through on this after staging a little bit of a flagging pattern? And you see a couple of those in this chart. You look at this one right over here. You have this flag, kind of another one. Now we're getting more of a sideways one potentially if we get this follow through. Do we get the breakout? Um, you know, there's plenty of things that you could point to, Nick, I think, and be bearish potentially. That being said, bears always sound like geniuses and when it happens, but what doesn't make you feel very good is when you're being bearish for a million different reasons and the chart just every day is telling you that, hey, we don't care about any of that stuff right now. It's not that it doesn't matter. It's not that it can't come back into the picture. It's not that you can't even be bearish, right? You just want to be mindful of what the chart is doing, what trend is doing, momentum is doing. And right now on the broad indices, everything in a major uptrend for the last couple of months, not really showing a lot of weakness, not really a lot of two-sidedness to the market, even in the weakest of the charts. When we look for the last couple of weeks here, it's hard to see two different days where it went down, right?
Hmm.
It exists every once in a while over here. But the point I'm trying to make here is don't get too stubborn, trying to go against trend, against the grain. Again, I'm not saying you can't be contrarian, you can't take a bearish position here.
Manage
You
risk
know,
if you do though, is what he's saying.
right, that's the point is, manage risk and think about your position sizing. And then once and I don't know when it's coming, right? Could be today, could start next week. We might be months away from this. Could be longer than that potentially. But once you actually see evidence of a reversal on the chart, that's when it's time to be a little bit more aggressive about it. Speaking of Russell, Nick, I know we're about 2 minutes from opening here. Let me just run through a slew of regional banks here this morning that had earnings. Get this to cooperate with me. There we go. And let me switch to the 15-minute. So a little bit of weakness here coming from Truist Financial. You can see I had a pretty strong day yesterday. Was a little bit higher earlier or late last night in the session, and then this morning we see, and this is probably a bad print down here, so ignore that one. But see a little bit of a reaction here to the earnings, but then rolling over as we head into the open. Look at this from a longer term perspective. So we are seeing a little bit here of this flagging. So we already had a little weakness coming in, and it didn't really recover a ton yesterday before the close. So we kind of have this zone where it's trying to hold. Really want to see this bottom, I think, and that's based on this low. So we have this low right here to this candle. You wanted to make it absolute based on this one. It looks like it's approximately 43 and three quarters. So looking for clarity on this one. It looks like we just got the candle to open there, and it's going to be a little bit higher to start. So can it resolve itself out of this? Right now, I'm not getting a ton of clarity on that particular chart. We had regions go this morning. And kind of the opposite, right? Similar looking chart going into yesterday. We had strength, a little weakness. It recovered a little bit better. Clear gap up above on this one, but still not quite through that all-time high. And then the area that I'm paying attention to here, now that it's above, is these former highs back from January of 2022. It looks like that's right where we opened this morning. So you're wanting to see a defense of that former high and the opening gap here this morning. And just to give you the level there, 25 and a half, almost on the dot. All right, let me do two more, Nick, and then I'll turn it over to you. Schwab went this morning. Good reaction from them as well. A little bit stronger than some of the other ones. And, it's, I know they have a bank, and that's why they get put in KRE and stuff like that. But, it's a brokerage company as well, of course. And we had seen some pretty nice recovery here after it was looking like it was going to break this initial kind of trajectory of uptrend, and it did for all of one day. Basically, we threw back to this former level of resistance, and it held, came right back to the top end of the range, and we're soaring on here higher. Now, the difference between that one and the other ones, it looks like this is potentially contesting for a new high. Let me zoom in on this other one and just confirm. High on this one, 96.24. So now that we've opened up here, we're right there, and you can see the line was initially a little bit higher, but it's kind of competing with it right now. So just be mindful of that level. Getting above this would lead to a path of, in theory, no resistance because we've never had a price above that former price. Just keep in mind the theoretical and the real world can deviate from time to time. All right, final one, Nick, and then I'll turn it over here. Ally. And another strong move from yesterday. Now, obviously, this one's weaker, so we're still looking for a little bit of clarity on this one. It's kind of making this flagging pattern. We're drawing it with actual constrained lines here. Would have it something like that. We're not actually outside the pattern yet based on these highs, so looking for clarity on this. And if we do get that, we kind of have this higher level just above it, 4150. And it's just above. We didn't actually quite get there on July 3rd. It looks like it's 4127 here. So if we do break this, can we get actually out of our own way on this one? And that's a pretty significant level from back in the early part of the year, as well as you can see this is a massive level over here, about 4138, 4140. You can see it struggle and it got above, used it as support, tried it again, and then just couldn't hang on to it. So there's a couple levels above 4388 and 45 38 if you're looking at potentially Allen. All right, Nick, let me pause there. If you had anything that you wanted to add to those, I know it was kind of regional bank heavy, but that's just how the earnings tended to shape up. I know Netflix went last night, and there's a lot of other things to talk about. So I'll pause there and turn it over to you, sir.
I know from a regional bank perspective, I was looking at KRE. It's the S&P's regional banking ETF, and really reminds me a lot of the Allied chart that you have. Let me just go ahead and steal your screen real quick and draw a couple quick things on this chart as it just kind of shows everything all in one fell swoop. But similar pattern with that flagging pattern that you were showing. But I am going to have this kind of downtrend right here. We see just like that. Because one thing with a flagging pattern or pennant pattern is, let's say you have to have a little that break of that downtrend, that upward move. You're then looking to continue, have a little bit of a continuation pattern of an upward trend. And that's kind of what we're seeing. Large upward move like that, we're bounce back up, kind of consolidating it. We then move sideways over here. We can see just kind of bouncing back off of this area right here. And then again, the additional leap upward, just like that. And now it's kind of consolidating, going sideways. So we can see a little bit of a leap up, that much shorter term. Let me shift over from a daily to maybe a 5-minute basis, so we can see kind of what's been going on. But we can see a lift up in the extended hour session, but then it's kind of selling back off a little bit, um, versus being at those day highs. So naturally, what the bulls will want to see here is they want to see it kind of come back up to this, just a little bit of a maybe a close in the morning gap, and then continue back up, but not to quite close completely, that gap from this morning. And so maybe bounce off of here and then continue this move that we saw all through the day yesterday, where just continues to move upward, sets that new higher level, and if we can wind up above, stay up above that level right there, that's naturally what those banking traders are going to want. And if they can then, of course, come up and challenge that level next, this level up here after that, that would then show strength in that slice of the sector. Would you get a great question, kind of segueing over dealing with volatility with the VIX index, just over 16, that does correlate with a roughly 1% daily expected move. I know it's a little bit different compared to, we're looking at the S&P 500 options and, seeing a 25-point move priced in based off the at the money straddle. Well, that's only a less than a 0.5% move expected today. Keep in mind some of the differences is that VIX index is based off options expiring in 30 days. And so in essence, it's priced in the average daily move over the next 30 calendar days is 1%. Today's move about 0.4%, because we actually have options that expire today. Now, we'll have options that'll expire on Monday, Tuesday, Wednesday, because we have daily expirations, the S&P 500. But the average daily move, if we only have a 0.5% move, well, it's within that 68% chance that it moves less than 1%. If we happen to have had a 1.5% move, 32% is going to move greater than 1%, and we can still then have where maybe it's a larger expected move today, but the rest of the month is expected to be still. And we'll see that with the earnings announcement, where the implied volatility of a 1 day is very, very, very high, but it's expected to really settle down because you have a big movement overnight one night, but then nothing the next 30 days. It's a little bit of that vice versa, where nothing's really expected to happen today. It's expected to be a little bit of a nothing burger day, so to speak. We had some of the housing start information earlier on, and it'll settle out throughout the rest of the day. Speaking of housing starts, let me shift over a little bit on the economic calendar. We did talk about that a little bit earlier. Had that information come up. The one thing I really like about this information is, I was also in the new home build industry years and years ago. So I always pay attention to, what the starts look like, because this is that new construction that's coming up online. And, naturally, if we didn't have any new construction, that means the supply of housing would have to stay static. And as, more people are born, there's more demand for housing, which could then really push up prices. And so this is a little bit that balancing act there, where we see, well, Here are those new starts, those new homes being built to increase supply that can help balance out the demand side of the equation on where home prices might move, which can push or pull around some of those inflation numbers because that cost does build into some of those inflation calculations. So with that, we shift back over here. I'd like to take a look at ITB, which is the iShares Home Builders Index, home construction ETF. And we see this similar thing, at least for me, kind of we're getting with the regional banking. Downtrend, stop. Now we've shifted sideways. So we're still below those levels, but we have bounced a little bit where we had this low. Now we have a higher low. And traders will be looking at this to see, will this shift, will this turn around? We kind of drag this up. We're just in that channel moving sideways. If I shift this over to, let's add, throw some moving averages up on that chart. We can see some of those levels that traders are going to be paying attention to is, naturally we have that 50-day right down here below. The 20s finally crossed up above it. We're just riding that up. We've bounced off of that, but we still have the 200 way up here from that particular perspective. Some last thoughts I had, Matt, as we wrap up. I know we only have about 2.5 minutes left to go in the session. I did want to point out some levels to think about with the S&P 500. So this is just SPY. As we can see, if we were to zoom out, pushing past those highs that we already had already. So let me shift this back over to last 5 minutes, looking at the last 5 days. That some of those levels to think about below, because we don't really have previous price points above that 627.5, kind of bouncing, resist, bounced off of that. That could be a level below. In addition, we have that 628 and change. We're kind of resisted, coming up through, resisted again, and then we sold back off a little bit until we closed at 628.04 on SPY. We see extended hours kind of bounce, and come up. Be interesting to see. Well, do we don't stay up at that 629 price point? Sell down? Do we bounce here? Do we bounce at even? Do we bounce down here? Or do we not even look back and we wind up at this 630 as we then continue this like that? We drop off the extended hours on the chart, and you can see that continuation just like that of what we've been having over multiple days would push us up to 630. With that though, Matt, I know we only have about 30 seconds left in the session. Any last thoughts you have you'd like to share with everyone before we wrap up?
Yeah, let me just talk about the expiration cycle because we had several questions on that, and I know we had a bunch of symbols that we got requests for, but we're probably not going to have time for those unfortunately this morning. So I apologize if we didn't get to your specific one. But let me talk about the expiration cycle here for just a second, because I know I mentioned that in passing, and I take for granted that sometimes I got to be more clear with what I mean by certain things. So when we're talking about an expiration cycle, The largest ones tend to be the third Friday of every month. And when we're dealing with index options like SPX and INDX and Russell 2000, they're going to have two different ones, right? They're going to have the one in the morning, the AM settled options, and then also the ones in the PM, which are based on the closing price today for that index. Now, why is this important? First of all, the AM options, those are done trading as of yesterday. Yesterday was the last time you could trade them. However, they're based on today's opening rotation pricing. That's how they're marked to market. The July 18th that are the PMs are going to be based on today's closing price. However, most institutional traders, and you can see this just by going and looking at the AM up here versus the PM, you can see the open interest is a lot larger for the AM than the PM, even though it's still decent, and that's going to get bigger because a lot of volume is going to go into those PM settled today. So why is all this important? So going into this event, this is usually a big hedging event, and this happens once a month, and then the quarterly ones, so the ones that wrap up the month of the quarter, then those are even bigger. Going into that 2 weeks, it's often considered a more strong window for stocks. It doesn't mean that they have to go up, but it's harder for them to go down. And the reason why is because as volatility and time go by, there's options centric risk that are decaying, and that's decaying the deltas for these options. And effectively, the bottom line here is the market makers are buying hedges back, and their hedges usually selling shares short, selling futures. They're buying this back in. It gives that natural bid to the market. Doesn't mean the
Ends it a
market
little
can't
bit.
go down, right? If the reason why it's going down is strong enough, it can absolutely still go down. So I don't want anybody to walk out of here and say, "Oh, in those 2 weeks the market only goes up." That is not what I'm saying. It's a window of strength, not guaranteed going up. When the options expiration comes and goes, well, now we enter a weakness area where the market unpins all this positioning that once we get past 6,300, that acts as a magnet for this to come back, right? Because market makers don't want it going too far above this. And it's not that they don't want it, it's they have an incentive to sell to make it come back down when you have a lot of negative gamma or positive gamma at a particular level. So that's why the expiration is so important. It doesn't guarantee anything. Listen, if we come out and we announce, no tariffs on China, England, the UK, South America, all these places, and the market goes into enthusiasm, yeah, it can rip higher. Conversely, if we come out with a 200% tariff on the entire world, can probably bet that the market's going to be strong enough to go down in spite of what's going on with the expiration. But it's just something to be aware of going into it. Market tends to get a little pinned going into an expiration. That will cease to be the case as of Monday. So just be aware of it. That's the main point, Nick. All right. We'll leave it there. Thank you for your time this morning. Certainly appreciate you having us, Nick. Always great sharing the stage with you, sir. And we'll look forward to seeing everybody the rest of the day.